All right, let's get right into it, because what just happened with Beyond Meat's stock was, well, nothing short of explosive. We're going to peel back the layers on the technical analysis and figure out what drove one of the wildest market moves we've seen in a long time.
So let's start with the big one. 146%. Yeah, you heard that right. That's a number that makes absolutely everyone, trader or not, just stop and say, whoa.
And here's the kicker. That wasn't over a year or even a few months. That massive gain happened in just one single week. We're talking a surge from a low of $1.47 all the way up to a close of $3.62. Just wild.
Which brings us to the big question, right? How on earth does a stock that's been getting hammered for months in a long downtrend suddenly pull a complete 180 with that kind of force? Well, that's exactly what we're here to unpack.
But, to really get what happened, you can't just look at the explosion itself. You have to look at the moments right before the fuse was lit. The context here, well, it's everything.
Man, this timeline really puts it all into perspective. Just think, back in July, the stock was hanging out near 750. Then it went into this steady, painful slide, hitting rock bottom at just over $1 on October 13th. And then, bam! 8 days later, it's closing at 362. That's not just a recovery. That is a violent, dramatic reversal.
Okay, so let's pop the hood here. Let's get into the mechanics of the breakout. What actually caused this thing to take off like a rocket?
So the report zeroes in on one likely culprit, a classic short covering frenzy. Just imagine, you've bet a ton of money that the stock is going to drop. Suddenly it starts to rise. You panic. You got to buy shares back to stop the bleeding, right? But here's the thing. When you and everyone else who shorted it start buying, that buying pressure just pushes the price even higher. It's a feedback loop, a total squeeze.
And if that short squeeze was the spark, this was the jet fuel. On a normal day, Beyond Meat might trade around 50 million shares. But on the peak day of this rally, it exploded to over 2 billion, with a B. That's a 41 times increase. That's not just noise, that's a signal that the big money has officially arrived at the party.
Okay, so the rocket is launched. It's soaring. But if you look inside the cockpit, at the dashboard, the instruments are going absolutely haywire. And this is where the story gets really interesting.
This is the core conflict right here. The stock has a total split personality. On one side, you have these powerful momentum signals basically screaming, full speed ahead, this trend is the real deal. But on the other side, you've got these warning lights flashing, saying, whoa, hold on, we went up way too far, way too fast, the engine is redlining and a pullback could be coming.
And let's look at the actual gauges. You've got the ADX and the MACD. They're your cheerleaders, right? They're saying the uptrend is powerful and it's getting stronger. But then you glance over at the RSI and the CCI, and they're the nervous engineers in the back just yelling that we're deep in overbought territory. They're classic signs that a rally might be totally exhausted. It is a complete technical tug of war. And hey, just so you can see what the pros are looking at, here's the full unsimplified dashboard from the report. It looks complex, because it is. You can see all these different indicators, Bollinger Bands, stochastics, all telling a slightly different part of the story. This is the maze that analysts are trying to navigate right now.
So, with all these mixed signals, the million-dollar question is, where do we go from here? Well, the analysis doesn't just look back. It actually games out a few of the most likely scenarios.
And it pretty much breaks down into 3 camps. The bulls have a slight edge, with the report giving it a 55% chance the rally keeps running. But look, there's a very real 35% chance that those overheated warnings are right on the money, and we see a pullback. And then there's a small 10% chance it just goes nowhere for a bit, kind of catches its breath.
So what does that actually mean for the price? Well, scenario 1, the bullish rally, would mean the stock tries to push up towards that 4, maybe even 450 mark. Scenario 2, the pullback, would look like a cool-off period, with the price drifting back down to around the $3 level to find support. And that third option, consolidation, that's just the stock trading flat while the market tries to figure out its next big move.
So after weighing all this, the explosive momentum, the stark overbought warnings, the possible futures, what's the bottom line? What's the final takeaway from this whole analysis?
I think it's summed up perfectly in this one line from the report. Yes, it was an absolutely spectacular reversal, no doubt about it. But those technical indicators are just screaming that this kind of move comes with a huge risk of a correction. It is the very definition of a high-reward, high-risk situation.
And that really leaves us at this fascinating crossroads. We have a stock that's sending two completely different messages at the exact same time. I'm incredibly strong, and I'm completely exhausted. So the question of where the story goes next, well, it might be less about the charts and more about which of those two narratives the market decides to believe. And that is going to be some real drama to watch.